What's going on, everybody? We're going to talk about the obligations warehouse out of the NSCC. Remember, failure is an option. We're going to go over how this works, what it's for, and we'll go from there. So look at these boxes on this conveyor belt for a second, and then we're going to look at the obligations warehouse. So what is the obligations warehouse? So this is a filing from January 7th, 2014. It's a SRO, National Securities Clearing Corporation filing, order approving proposed rule change to add a new service to the National Securities Clearing Corporation's obligations warehouse, which would pair off and close certain open obligations, reducing the number of open obligations in the obligations warehouse. Now, this was implemented in 2011 and is a non-guaranteed automated service that tracks, stores, and maintains unsettled ex-clearing and failed obligations, as well as obligations exited from NSCC's continuous net settlement. Exited from NSCC's continuous net settlement system. Non-CNS automated customer account transfer service, or ACATS. Receive and deliver instructions, balance orders, and special trades as defined in NSCC's rules. The service provides transparency, serves as a central storage of open, or in other words, failed or unsettled, broker-to-broker obligations, and allows users to manage and resolve exceptions in an efficient and timely manner. Simultaneously, OW provides ongoing maintenance and servicing of matched obligations that have not been marked by a member as subject to upcoming delivery, closure, or cancellation. Examples of this ongoing maintenance and servicing include adjustments for certain corporate actions, daily review for CNS eligibility, and regular processing of the reconfirmation and pricing service, or recaps, in the OW on days announced by important notices. During the daily review for CNS eligibility, OW obligations that are eligible for CNS are exited from the OW and then forwarded to CNS. On days when recaps is run in the OW obligations that are eligible for recaps are renetted and, if appropriate, marked to the current market price and provided with an updated settlement date of the next business day. Now, Supernote 4, obligations that are matched and have settlement date of at least 2 days prior to the date on which the recaps process commences will be considered for inclusion in the recaps process, and therefore fail items not already in the OW and eligible for recaps processing must be submitted by the member prior to recaps processing. Also, the pair-off function will run once a day immediately following the completion of the review for CNS eligibility. Now, CNS is the continuous net settlement system. And then Supernote 5 here says that in the event that the current market price for a security is not available, the obligations price details will be unchanged from when it was previously matched. Today, in order to reduce the number of obligations that remain on their books and records, members may take actions away from NSCC to close out these open obligations in OW. Those members would then close the obligations in OW. The pair-off function will facilitate the closeout of any OW obligations that members designate as eligible for the service. By facilitating the closeout of these obligations in an automated manner within the OW, the pair-off function should add transparency to the life cycle of these obligations that may otherwise be closed out away from NSCC. With respect to obligations that are removed from the OW as a result of the pair-off function, members' administrative costs associated with maintaining these obligations in OW should be reduced. Now, the pair-off function will use a matching methodology that will pair off eligible OW obligations based on the quantity of underlying securities, the final money amount, and the settlement dates of the underlying obligations. The pair-off function will only match OW obligations that have been designated as eligible for pair-off by both members that are party thereto and that are in the same QSIP and have the same counterparties, where the counterparties have offsetting long and short obligations. The methodology will pair off eligible OW obligations in order by first pairing off those obligations that have the most criteria in common. For example, the methodology will first pair off eligible OW obligations where the quantity of underlying securities, the settlement dates of the obligations, and the final money amounts are identical. The methodology will continue to review eligible OW obligations subject to certain rules, beginning with eligible OW obligations with the oldest settlement date, and eligible OW obligations with the smallest number of underlying securities. So there you have it. Now, this is important. Eligible OW obligations will be paired off where the quantity of underlying securities, the final money amount, or the settlement dates of the underlying obligations may not be identical And in certain cases, one OW obligation may be paired off against multiple OW obligations. However, a pair-off would never occur if it would result in 1. A negative quantity of underlying securities in either of the original obligations, 2. A negative final money amount, or 3. At least one of the obligations subject to the pair-off to remaining open with a reduced quantity of underlying securities and a final money amount of 0 or less than 0. Additionally, OW obligations and municipal bonds would only be eligible for pair-off where the quantity of the underlying securities in the obligations subject to the pair-off is identical and no underlying securities remain. When the pair-off criteria are met, the OW obligations will either be closed out, or when the quantities of underlying securities are not exactly matched between obligations being paired off, the pair-off will result in one or more of the obligations being reduced by the quantity of securities that were paired off. Those obligations will remain in open status in OW and will be adjusted to reflect the reduced number of underlying securities. Where the underlying final money amounts are not exactly matched between obligations being paired off, the pair-off will result in a cash adjustment, which will be reflected in the member's money settlement with NSCC on the following business day. So why the fuck are we talking about this like it's going to be some kind of squeeze-causing agent? It's not. It's literally another method to get out of crime. And again, it can't happen if these three things happen: negative money amount, negative quantity. At least one of the obligations is subject to the pair-off remains open. So let's get real. Let's go. Let's get Brandon. Okay. Anyways, the market opens in 6 fucking minutes. Let's go.